But let's start off with the market update. So sales activity for last week in Perth was up 1.8%. So according to the stats from CoreLogic, there were 903 transactions as of last week.
Sorry, how much did it go up?
1.8%
For the month?
for last sales increase on the previous week.
Okay.
Yep. So property sales, 8,595 properties were for sale at the end of last week. And 2,300 properties for rent.
Not very many.
So still tight for us. CoreLogic's National Home Value Index recorded a second consecutive month of value declines in June, down 0.6%.
Is that in WA or is that across Australia?
That's across Australia, yeah. Continued falls were in Sydney was the predominant one. Each capital city and broad rest of the state regions are now past their peak point, so their trending rates are down across the board. Growth rate in Perth's housing values, which was temporarily showing a second wind, has started to lose momentum, but values are still 0.4% up in June. So out of all the states, we're doing better, but obviously we're coming off a lower
Coming off
high.
a post-COVID maybe.
Yeah. So if we go through the stats in terms of the different states or capital cities, Sydney was down 1.6% for the month, 2.8% down for the quarter, but 5.9% up annually. Melbourne was 1.1% down for the month, 1.8% down for the quarter, but 3% up for the month, or annually, I should say. Brisbane is still going strong. So for our Brisbane members, 0.1% up for the month, 2.7% up for the quarter, 25% up for the year. Adelaide's also doing reasonably well. Month was 1.3% up, quarter 5.1% up, 25.7% up for the year. And then for our Perth members, month up 0.4%, quarter up 2.1%, and annually up 5.8% as of the end of June. Obviously, with the latest interest rate hike, will be interesting to see what happens for July going forward.
So 5.8% for the year.
5.8% for the year, absolutely, yeah. So these are good stats. Part of us sharing that is just to be abreast of such information. You guys are probably getting it already, but it's a good way of starting to educate your clients and prospects, right? So if they're coming with unrealistic expectations as you're appraising stuff, but also for the ones you've already got on the books, if you need to start talking, then these are the sort of stats you can start to share. Okay, so as you can expect with where things are going, conditions are slowing down, and so things are swinging back towards buyers. You know, we've been in the seller's market for a while now, but it's definitely coming back to the buyers. Yeah. So CoreLogic estimates home sales nationally through the June quarter were 15.9% lower than a year ago. So that gives you another perspective to share with your clients, but still holding 13% above the 5-year average. So we're 13% better than we were over the 5 years, but we're 15.9% down compared to this time last year. Yeah. So again, another perspective to start to educate your clients and prospects as you go through it. All right, some other data that might be helpful. Rental markets remain extremely tight around the country, with rents now consistently rising at a faster rate than housing values. Nationally, rents increased 0.9% in June, taking the annual growth rate to 9.5%. This is the highest annual growth rate since December 2007. So again, throw that dynamic in, right? People might not be able to afford or don't want to spend the money to buy the house, but their rents are going up at the same time. So you just want to be aware of that and use that.
Since what year, sorry?
2007. So up almost 10% and growing at 10%. Some other interesting facts. Rate rises, they're talking, if you look at forecasts, is saying that they're going to get up to 2.5 going forward.
That's the official rate.
That's the official rate, yep. So we've had another 0.5 come up this week, but they're saying it could end up going up to about 2.5.
What is it currently? It's
1.35. We've got Tracy on the call today, so she might be able to share a little bit more with us later on that, Tracy, if you don't mind. That'd be great, thank you. All right, what else have we got to share? So just a few other interesting stats, just again for your information that might help with some of your conversations. So depending on how things go over the next 6 to 12 months, here's some different scenarios that could start to play out so that you're aware of. A 10% decline in the market would take the national housing values back to levels that were July 2021. Yeah. So people are starting to get worried and freak out a little bit. Just give them a bit of perspective. You know, if we drop by 10%, all that's going to happen is going to end up back to where we were in July 2021. Yeah. A 15% decline would take the market back to April 2021. So again, not much different. And a 20% decline in home values would take the national index to January 2021 and only marginally above values in late 2017. So if it goes worst case scenario, goes quite extreme at 20%, we're going to be around January 2021 or 2017 values. Yeah. So again, just gives you a nice reference point that you can leverage and use with your different clients.